Everyone is looking at the chips. Everyone is obsessed with Nvidia, staring at the engine of the race car, screaming about speed and generative AI. But there is a massive structural problem that almost nobody is talking about. A problem so big, it is currently keeping the CEOs of Microsoft, Google, and Meta awake at night. The problem isn't the code, it is the physics. We are trying to shove so much electricity through these new AI factories that the old world is literally melting. The infrastructure we built for the internet is obsolete, and that creates a silent crash risk for companies that aren't prepared, but a generational wealth opportunity for the one company that holds the blueprint to fix it. Today, we are looking at the architect of the AI industrial revolution, a stock that my research suggests is trading at a 25% discount to its fair value. A company that isn't just riding the wave, they are building the pool. Welcome back to the channel. Today, we are reverse engineering a high conviction thesis on Vertiv Holdings, ticker symbol VRT. Now, before we open the hood on this billion-dollar machine, let's get the housekeeping out of the way. I am not a financial advisor, and I'm definitely not your financial advisor. Think of me as a guy on the internet obsessed with numbers who reads the boring 10K filings so you don't have to. I'm showing you my homework, not telling you what to buy. The market is a casino where the house usually wins, so always play with money you can afford to lose. Deal? Deal. Now, let's look at the magic trick. To understand why this stock is undervalued, you have to understand the physics of heat. In the old days, data centers were cooled by air. Giant fans blowing cold air over hot servers. It worked because the density was low, about 5 to 10 kilowatts per rack. But then came the Nvidia Blackwell. These new AI clusters don't run at 10 kilowatts. They run at over 120 kilowatts per rack. Trying to cool an AI factory with air conditioners is like trying to cool a nuclear reactor with a desk fan. It is physically impossible. The heat density is too high. This is the reveal. The market thinks we are just building more data centers. We aren't. We are fundamentally replacing the architecture of the global fleet. We have to switch from air to liquid cooling. Water is 3,000 times more effective at transferring heat than air. And this transition isn't a choice, it is a thermodynamic requirement. And who sits at the center of this transition? Vertiv. They are the only global pure-play provider capable of doing this liquid cooling at the scale the Magnificent Seven requires. While competitors like Schneider Electric and Eaton are busy selling residential gear or aerospace parts, Vertiv is surgically focused on the critical white space inside the data center. Now, a skeptical investor would ask, why can't Google just build their own cooling pipes? Why can't they just buy cheap parts from a startup? This is where Vertiv's unit of compute strategy comes in. They don't just sell a pump, they sell the entire ecosystem. The coolant distribution unit, the busbar power, and the battery backup. They pre-integrate it all with Nvidia's reference design. Think of it like the Apple ecosystem. Once a hyperscaler like Microsoft certifies a Vertiv design for their billion-dollar server farm, changing vendors isn't just annoying, it creates a massive switching cost. It requires recertifying the entire electrical topology of the building. It's the Hotel California of infrastructure. You can check out anytime you like, but you can never leave. Plus, there is the unsexy moat. Vertiv has 3,000 field service engineers globally. If a liquid cooling line leaks in a data center in rural Iowa or northern Sweden, you can't wait 2 days for a technician. You need them there in 4 hours. Vertiv has the army to do that. Startups don't. That service network is an insurance policy for the world's most critical data. Let's talk numbers. Why do I think this is cheap? Currently, the stock trades around $170, but when we run a reverse-engineered discounted cash flow model, the math tells a different story. Here is the data the market is ignoring. We are looking at a CapEx supercycle. Microsoft, Google, Amazon, and Meta are projected to spend over $350 billion annually by 2026. In the past, only about 15% of that money went to infrastructure. Now, that is shifting to 30 or 40%. They are spending more, and a larger percentage of that spend must go to power and cooling. My model assumes a conservative 21% revenue growth for Vertiv and operating margins expanding to 23.5%. When you discount those cash flows back to today, you get a fair value of roughly $215 per share. That is a near 27% implied upside from current levels, and that's the base case. If the shift to liquid cooling accelerates faster than predicted, which Mark Zuckerberg has hinted at by saying they are front-loading capacity, that number could go higher. But I'm not a cheerleader. I'm an analyst. What could go wrong? Number one is the copper crunch. AI data centers eat copper for breakfast. There is a looming global shortage of copper. If Vertiv can't get the raw materials, they can't build the pipes. But they have hedged thousands of tons of copper to protect themselves. Number two is the air pocket. If AI software doesn't make money soon, big tech companies might pause their spending to digest what they've built. If they sneeze, Vertiv catches a cold. However, looking at the order backlog, which is sitting at record highs, and the sheer panic among tech giants to not get left behind, the reward seems to outweigh the risk. Vertiv isn't just an industrial stock. It is a technology derivative. It is the pick, the shovel, and the oxygen for the AI gold rush. The AI revolution is physical. It's heavy, it's hot, and it needs to be cooled. I want to hear from you in the comments. Do you think the AI infrastructure trade is just getting started, or are we in a bubble about to pop? Are you buying the picks and shovels or sticking with the chip makers? Drop a comment below, smash that like button if you learned something new, and I'll see you in the next one.